if it was real life, we would have been all of us when it is in real life in the conference room, we would have been in the dress code like what is on the picture, correct? Now we are working from home, so all of us are like a semi.
Yes. That's true.
Okay, so
Somil, you can start recording.
yeah. Okay, so we have got our participants now. We have 50 and it's trickling in. It's 51 now, 52. So let it happen. Thank you everyone for joining us for the webinar Back to the Future, focusing on pharmaceuticals, and the subject is time to consolidate. We have Uday Ved, partner KNAV, and they has more than decades, actually few decades of experience, and today he's going to be moderating this session. So without much ado, over to Uday Bhai to start this session from here.
Thank you, Somil, and welcome all of you to this webinar organized by KNAV. Good evening to our friends in India here, and we also have people in Singapore. So little late good evening in Singapore. We also have guest participants in the USA. So good morning to them. So we have people from across the globe, and we have a very interesting webinar focusing today on the pharma and the healthcare sector. As a number of you would have attended webinars, and we have done too, which are more general in nature. This time we thought it is good to focus on a particular sector, and we couldn't find a better sector than pharma and healthcare to talk about it. A lot of consolidation is going on in pharma sector. It has happened over last few decades, and COVID has possibly speeded up some of those things. Right now, the entire focus is healthcare, as you know, globally and also in India. We have a very interesting panel. We have a special guest, Mr. Milan Paleja. Milan is the chairman of Wellesta Holdings group, based out of Singapore, and he has decades of experience. I have known personally Milan for a very, very long time. He spent all his career practically with Novartis, based out of Singapore, but worked across the globe. And his last stint was he was the vice chairman and managing director at Novartis India Limited. And now he's become an entrepreneur, and we are great to have him here. Thank you, Milan Bhai, for accepting our invitation. Number of people who are joining today are very eager to listen to you.
Thank you.
Yeah. And we also have our partners who are the other panelists. I have Atul Deshmukh, who is our global leader on assurance practice, based out of USA in Atlanta. We have Vaibhav Manek, who is our partner leading the business advisory in Mumbai. We also have Amitabh Khemka, who is a leader of our indirect tax practice in Mumbai. And of course, Somil is the one who is head of our market. So we have a panel which is full of people with experience. All of us in KNAV have had experience of working with pharma companies over years, including myself. So we are clearly going to focus on this aspect today. Somil, can I request you to move the slide, please? So what we want to focus today are few things. We will have initially me give a perspective on the pharma industry, the global and the Indian, as we understand, sitting on the other side as the consultant. And then we have Milan Bhai speaking to us as an industry veteran, his experience, and particularly focusing on not only large pharma MNCs or large Indian MNCs, but there are a lot of MSME, and government that focus on MSME companies in pharma who want to grow, and what are the challenges, what are the opportunities. So he's really going to focus on that. Interestingly, I was talking to Milan and I said, your subject is so apt with our Honorable Prime Minister talking of local being vocal, and you can't have a better theme than that to talk on how to really have mid-sized pharma companies, Indian companies who have experience, but they do not know how and where to grow. I think some of those aspects, our expertise, of course, is on accounting, income tax, M&A, GST. So that's going to be our focus when we speak of what are the accounting issues. Lots of deal happening in pharma in the past, and interestingly, even in this COVID times, in fact, the deal on pharma sector have actually increased. So we will talk on that. Indirect tax is a very big issue in any pharma company being a manufacturing sector. And then once we finish that, we will open it up for Q&A at the end. So I expect this entire discussion to get over in about all put together 40-45 minutes, and we'll have some good time for questions. So you can put your question in the chat mode whenever you have, and we will be glad to answer that, including Milan is there. If I go to the pharma space, the global space, it has impacted right now. The COVID has impacted all over the world, and pharma sector is no exception. There has been the entire industry because of this pandemic is suffering because the two countries, China and India, are the major suppliers of APIs and generic drugs. And with supply chain being adversely affected, the production has come to a halt. But interestingly, whereas China has gone through the entire pandemic maybe 3 months earlier, almost, than the rest of the world, their factories are opening up. And we didn't have that pandemic. So our factories were open during that period, and now it has come to a halt. So there is already a production in India, and there is a demand in China. And we have seen some of because of the production, India was able to supply some pandemic. Of course, there is no medicine or vaccine today, but India was able to supply some of those medicines to USA and all over the world. Next, please. So the global size is close to $1.2 trillion and expected to go to 1.6. So huge demand, in the market for pharma will always be there. People across the world becoming more focused on health. The pharma is going to be in demand always. The key aspect has been rising drug prices, and even in last few months, as an example, the price of vitamins and penicillin have increased by 40-50% in India. No wonder. Global supply chain, there is a huge disruption, and that is creating its own challenges. But yes, this is temporary, hopefully coming to an end soon, and the cycle should start. We believe that FDA, which is the authority controlling all the generic drugs, because of the shortage, they may go a little ease out on those companies going forward. Reassessing trading partners has always been a concern. And like any other, the use of data analytics, the use of data is a very, very important part in this industry, and that will those who have that will become the winners. Next, please. Coming back to the Indian pharmaceutical industry, 60% of the vaccines globally are being manufactured in India, and we have companies like Serum Institute, who is a leader in this industry, and hopefully maybe one of the first few to come out with a vaccine on this COVID in the times to come. We have had our dependence on China for import. It continues. And so that's one thing where the local part that our Honorable Prime Minister spoke, if we have pharma companies grow, create the right environment and conducive environment, and he did speak of land, labor, laws, and liquidity. And the fifth one is a local. If we do that, then I think self-reliant India, which we are speaking for pharma, it can really become a reality. Valuations are in trouble. Naturally, companies are in trouble all over the world for all sectors. Pharma is no exception. There are risks because of the extended lockdown. But there is clearly an opportunity for the pharma industry, for India to become a manufacturing hub going forward, if all the parts are being put in. And I think that's where Milan is the one who can speak more about it. Next, please. Just everybody knows about it, but briefly, this is the general package as our Prime Minister calls it Atmanirbhar Bharat, or a self-reliant Bharat, self-reliant India. The focus is on self-reliant and not self-isolation. That's a very big difference. We are not getting isolated from the rest of the world. So whereas we will promote our local brands, we want to promote them to a global level, and foreign investment is not going to be restricted. Of course, we have had some restriction put in on countries where we have a land border and focused on China, but there is also the foreign investment is not prohibited. It is going through a specific approval route. We want to make sure. The focus is going to be on MSME, and I think if MSME really grows and finds the answer, we have a huge success story on India. We have a number of liquidity and cash flow measures which have been announced. These are general, so I don't want to get into it, but certainly it has put in and it will put in more cash and liquidity in the hands of corporates. Next, please. If I was just interested in seeing the impact, nobody thought about COVID will come so fast. So in March itself, 2 months back, government had focused a lot on the pharma sector, and lots of schemes were being discussed or in the process of approval. There also the focus of the schemes was to boost local manufacturing capacity, make quality healthcare accessible and affordable to the common people, and reduce over dependence on China. So these were already thought through pre-COVID, and here comes COVID, and we have now full-fledged package for MSME. Of course, the implementation for all the MSME and particularly in pharma sector would be a key, where the necessary funds should reach them. But there is, in addition to funds, there are lots of other business aspects like R&D and other things that pharma companies need to follow to become the global leader. One other thing which is going to happen for this industry is the exports. Just 1 minute before the export of this industry in pharma sector is already increased, and I think we have have a real opportunity to not only to make India as the manufacturing hub for the local, but also promoting exports. Now with this, would leave it to, I know that people are very keen to hear Milan by you. Over to you for your take. Thank you.
Thank you, Uday, and thank you, everyone. Good evening to all the colleagues in India, and good morning to the colleagues in Singapore. Good morning to colleagues in the USA, and good evening to colleagues in Singapore. I'm very glad to be part of this session here, so thank you for inviting me. If I come to the specific, that industry where I spent almost 3 decades, and it will continue working in the same industry, because Wellesta also operates in the healthcare, and we operate in the multiple countries, and we work with some of the big Indian names, and we work with some MNCs also, though we started a company 1 year back, and happy to share my perspective on the couple of points what we have here. And then happy to take a question answers later in the day, when we are later in the session and when the team is ready to put more questions. So if you look at the state of Indian pharma industry post-COVID, I would say 2 things. First, not only Indian pharma, but overall pharma market will become more bullish because people are going to become more careful with health. Earlier, old days, our grandparents' time, they used to go to the doctors when they were sick. Then came to our parents' time, they used to go a little bit whenever they have little symptoms. And in our times, we are more careful and we are doing a preventive breakdown checks. Okay. Now with the COVID has given a real big wake-up call to, I think, all humankind. People will start behaving more and more careful going forward. And I would say that overall pharma industry would be looking much more upbeat. When I say that overall pharma industry may look more upbeat, I would give a little bit of one word of caution there. The overall financial economy might be little slower. And little slower means people's income will be lower. If incomes are lower, they will try to spend less money on everything what they do. So definitely luxuries will get big way impacted. But when it comes to pharma, people, if somebody is taking a medicine for hypertension and he's taking X, he will try to say, I can take the same medicine at a lower, cheaper molecule. And that may become to a shift of a molecule from maybe a branded to a generic. The branded company may also go and reduce the price. So I may see that pharma industry will become bigger volume industry, but price pressure may come in because overall economy will take a while to pick up. Coming to Indian pharma industry, I see it's going to be much more upside, but it is up to us to say that how Indian pharma will capitalize. And that's where I touch upon moving from first point to second point, opportunity to be more self-reliant. As we saw in the slide 5, where India pharma, roughly 60% of the volumes comes from Indian pharma as a volume of formulation. But we are importing 60% of API from China. So formulation, we have the big guy, but we don't capitalize on the value. And we are dependent on API on China. So this could be a great opportunity for big Indian company to go into backward stream for getting ready for the API manufacturing, and that can give them opportunity through Atmanirbhar, which is a theme of Modi Sahab. Being more Atmanirbhar, and if we start doing Atmanirbhar today, it will take us a few years. It will not be ready tomorrow. If we go back to the couple of years, I tell you when I started my life in pharma industry in 1984, okay? And that time, Indian companies were thinking that we want to be a big formulator. 30 years back earlier, if we look at OPPI, pharma company was dominated by MNC. Today, if we say total Indian pharma market, 65% sales is coming through Indian pharma companies and 35% come through the MNCs. Now it's to see that how this space Indian pharma can take into the rest of the world. It can come into the two way. One, try to do backward integration, go into the API manufacturing, high quality API manufacturing. So it's not only required by your own company, but you can export that to the other part of the world. So your Forex becomes more stronger. You get more stronger dollar earning. And even rupee dollar, which is depreciating, that can change because today you are importer, you slowly go to the exporter. Okay, and India is known as a chemistry of the world, which we all know. India is known as a chemistry of world. How do we capitalize that? If I move to the third point, moving up the value chain, India is known as a big generic company. We are generic research. If you look at the top 50 pharma brand, not even single brand come from India. Okay. Not a single brand from India. This is so important to say that if we have to move into the brand, then you have to create to research. There is no molecules are coming from. Now, if you look at that, some Indian companies, I'm not going to say the name, but they have started putting X percentage of their sales to research. Some of the top MNC may go at 7 or 8% to the research. Okay, Indian MNC, I'm meaning about. But if you look at a big MNC, they spend almost 16 to 20% of the sales on a research year after research, then you can get a molecule. So this is a great opportunity for Indian pharma to say they shift the gear in the second and third game, go into the API and start creating a research base. We have a lot of smart scientists working in India, but Indian companies need to see how they invest into the research, come out with the molecule, and that can be really a powerful for IP and value creation. The generic would be always a second value creation, but if it's IP, you would have the value creation. And my last comment is on the consolidation by way of collaboration. And this is a common approach for whether Indian MNC, Indian pharma MNC, or it could be small, mid-sized Indian pharma company. What I mean by this, that look, global world is very large. Most Indian company focuses the Europe and the USA. High price realization. Keep in the mind, Europe and US also come under price pressure because everybody is going to put a price pressure. So your price is going to competitively down. Now, world is very large. Every geography, if you cannot capitalize, you can opportunity, you can do two things. If certain geographies, if you are not present and you have excellent product, tie up with the companies who are present in those geography and you are making them as a marketing partners and ensure your products are going, that is giving you incremental sales and incremental profits. You don't know those markets, so try to use the expertise of the market. Don't try to do everything yourself. That is, we say the synergizing and working collaborative. Second part would be also, I would say that even Indian companies, many companies are trying to do everything, many therapeutic area. Don't try to do everything, because if you try to do everything, if you look at big MNC, which are doing, they don't do all therapeutic area. There are so many therapeutic areas you are trying to do. Don't do that. Try to collaborate. Some companies can lead take on certain therapeutic area. Some companies can do a lead take on certain therapeutic area. And how do you collaborate? If you are known as an API guy, tie up with the local manufacturing guy who formulate for you, do a JV, and then you try to export to the countries. Certain places you create your own footprint, and certain places you try to partner with a local company or a strong marketing company like us, who are trying. This is not a pitch for my company. We started just 1 year back, and now we have 270 people working in 3 countries, and soon we'll be 500 by end of this year, or maybe first half next year. We'll be more than 500 people. Okay, but it would be the best way to see how you grow your business by optimizing the strength of the market or optimize the strength of your skill set. That would be my comment, and I want to take a pause here to take any immediate question, or we can go to the Q&A. I'll pass on to the next speaker.
Okay, thank you, Milan Bhai, for this very crisp and very focused kind of a take. And I could see, I could just see a couple of things just on this slide, some key messages that I could at least hear from you. One was you are talking of the backward integration, very, very important to make it API focused industry. And then you focused on the research, right? Going from generic to research. India does give, at least on the tax front, gives the weighted deduction right now. It is of course in a sunset clause, right? Instead of 100 rupee that you spend, you get 150 or 175%. It's now a sunset clause, and I would believe that government should try and give that extension. In the past, pharma companies, and I'm seeing few of the participants who are friends who we have worked together, government has not been amenative, but I think in this new scenario, if you have to really focus on research, give that benefit, because otherwise, we are working on a couple of projects, Milan, where people were thinking of moving the R&D from India to USA. Okay, because USA gives R&D tax credit, tax refund, Australia gives it. So R&D is going to be a very, very focused, of course, the business aspect first, but the tax could play a big role in that. In the last part, you of course spoke about the collaboration, but focusing on your strength and collaborating, which is the world order on this. So let's move from here to our panel. Next slide, please. Let's focus on some of the accounting implications on the pharma industry, and we could have a better person than Atul Deshmukh, who is our global assurance leader, but an Indian chartered accountant and a US CPA, and done a lot of work in the pharma sector in last 20 years. So Atul, let me just take your take on what do you think this impact of the pandemic right now on financial reporting norms under both India and the global gaps, be it IFRS or Ind AS or US GAAP, as you see it practically going through with December ending, you know, the different take versus the March ending now in India. So your take, Atul.
Sure. Thanks, Uday, and hello everyone. Good evening to people in India. Good morning to people in the US, and probably good afternoon to people in Europe. Uday, you said it right. You know, depending on your financial year end, whether it was December 31, 2019, in which case the COVID-19 pandemic basically becomes a non-adjusting event, as we call it, when we talk about subsequent events or events after the balance sheet date. But when we look at the fiscal year ended March 31, 2020, then for those companies reporting with that fiscal year end, it becomes an adjusting event because the conditions were present as of the date of the reporting period itself. So that's a nuance that one definitely keeps in mind. There are, when it comes to accounting, we have seen that there are certain impacts which are there across industries. Some of them basically with respect to impairment of non-financial assets, including goodwill. COVID-19 effectively has become a kind of a triggering event. We have got impacts on valuation of inventories, especially, when we look at cost versus the lower of cost or market. So the net realized a question. We also are relooking at the allowance for expected credit losses, especially given the fact that some companies might actually go into bankruptcy. Very specifically, from my experience looking at some of the pharma companies that we work with, I would highlight, some very important aspects that are coming up. I guess the first aspect which comes up and which is important is when it comes to the failure to supply penalties. And, both you and Milan Bhai have been talking about the supply chain bottlenecks that have occurred. With API being manufactured primarily in China, with the fact that there have been lockdowns and there have been also issues with respect to transporting goods, there is a possibility that companies might be actually facing what are called as penalties for failure to supply. Now, a very important change which has occurred because of Accounting Standard Codification 606 in India, it is the Ind AS 115 IFRS 15. These failure to supply penalties are accounted as variable consideration. So that's an important aspect to be considered. Those need to be accounted in the right manner. And another nuance which also comes in, I don't want to throw accounting jargon, but another nuance which comes in is that these penalties are to be treated as contractual liabilities and not as contingent liabilities. So an important difference in that then comes in that when it comes to contingent liabilities, you can use an expected probability model. But when it is a contractual liability, you have to calculate what is the stated value of the penalty, and then accordingly, you have to take that into account. Another aspect which also comes in is with respect to acquisitions which have happened in the recent past. And let's say if there is an indefinite life IPRD, in process R&D, which has been acquired. Now, the fact that the FDA approval process itself is getting delayed because of COVID-19, that might become a triggering event for testing the in-process R&D for impairment. On another aspect with respect to acquisitions which we need to take into account is with respect to contingent considerations, because contingent considerations many a times are based on milestones, based on product approvals, based on commercialization in markets. Now, some of those, given the time frame that we are looking at and the dates which were previously there within acquisition, share purchase agreements or asset purchase agreements, those you might see a difference in the way in which they might actually turn around than what you had previously used when you had used the valuation norms for those contingent considerations. So that's the second aspect that definitely I think we need to keep a look at. Another aspect, and I think this affects primarily contract research and development organizations. So many of the CROs, they actually use the cost input model when they are recognizing revenues. So today, what might so happen is that you might have an unexpected increase in cost, simply because of the fact that all your workforce is not available currently. The time to actually now obtain participants for your clinical research studies, all of those might kind of increase. Given that your whole the cost of the contract itself is going to go up, the cost that you're currently incurring are probably going to go up. Whether that actually leads to a performance obligation being met is something which is again a question. So definitely that's another aspect which needs to be kind of looked at. Even with respect to milestones, a lot of contract research organizations have milestones based on product application reviews by the FDA being completed. Now, the FDA itself is going slow, so those product application reviews might not take place. So that might lead to, again, deferral in terms of these revenue recognition. So various aspects, I know that accounting is not the most interesting aspect, but that's one aspect that we are kind of dealing with here on a regular basis. So I'll stop there again. Later on, if you have got questions, more than happy to take them up when they come up.
So, Uday bhai, just an interjection. Atul,
Yes.
there's a question for Atul on the panel. Since it was very relevant to failure to supply, I thought we'll just intervene. So, Atul, the question is that failure to supply may not always have an impact because of force majeure in the agreement, if there's a specific agreement. So, and if pandemic will fall into force majeure, so in that context, will the accounting change?
So, Vaibhav, you're asking an accountant a lawyer's question. I don't think I can comment, on whether it is a force majeure event per se. I think the practicality of it that remains is that many of the companies are dependent on just a few customers, and especially in the US, you can't work without these customers. Okay, so I don't know whether especially from a US perspective, whether companies will actually invoke the force majeure clause, simply because the dependency when it comes to the McKisson's and the large big box companies within the US or GPOs for that matter, I think is too big. So from that perspective, we have seen that accounting is taking precedence and people are actually doing what is necessary to continue with business.
Sure, thanks, Atul. We have several questions on China, etc. We'll keep them towards the Q&A session at the end. Uday bhai, please continue.
Sure. Just to conclude, lawyers across the country have tried to raise this question on force majeure, and the unfortunate answer from our perspective seems to be no. That possibly force majeure is not attracted in most situations. Although Indian government has announced this as a force majeure event earlier in February. Okay, not even much before the COVID hit India. But force majeure, I think, is an exceptional one. Looks unlikely, and I think that possibly answers. Although we are not lawyers, I'm just saying based on number of transactions, lawyers that we have spoken in last 1.5 to 2 months. Anyway, let's move to the next one, which is very near and dear to me, which is the tax. Some of the aspects I wanted to touch upon, mainly because this sector goes through so much transactions, mergers and acquisition, consolidation, as we say, that's the theme. And not specific, of course, there are issues relating to pharma industry under the Income Tax Act in India, but number of those M&A tax related provisions apply to pharma industry just because that's the industry going through a lot of restructuring and consolidation. So we have seen good old days, and I remember working with Milan at that point of time when Sandoz and Ciba merged globally to become Novartis. Milan was part of Sandoz and I was assisting Ciba. At that time, the mergers in India, because although the global merger took place, India pharma companies are lots of listed companies. So you had to go to a listed company merger. We had high court process at that point of time, which continues today. Now it has moved to NCLT. So the same provisions still apply if there is a full-fledged merger of the companies, the merger or a demerger. Of course, now we have general anti-avoidance rules in place in India. So any merger, any transaction done to gain only tax benefit can be questioned. So as an example, you were to merge a profit-making company into a loss-making company or otherwise taking benefit of the tax for moving a profit-making company into a loss-making company, then those provisions can be challenged under GAR. Other than that, the provisions are controlled by NCLT. In pharma, there is also a lot of sale of brands and IP which take place, both in India and internationally. Those, so it may not necessarily be a full-fledged merger or a business transfer, simply a sale of brand, purchase of brand. There are depreciation related to that. There are brands in India versus brands overseas. So we have seen Indian MNCs acquiring brands in India, also acquiring brands overseas through their overseas subsidiaries. In the past, Ireland was one such location which was used as a brand holding company. Now with the tax avoidance measures like the BEPS, the base erosion and profit shifting, even those creative structures just to take benefit of tax are under attack all over the world and including in India. R&D is specific to India, as I just mentioned. Any in-house R&D done has been subject to a weighted deduction. It has been continued for years. The last extension happened in March 17, ending on March 20. So from current year, the weighted deduction, which is 150 to 170% as the case may be, 75% the case may be, is withdrawn, and it would be appropriate for government to relook into it, and this would be one of the aspects will come. Of course, no tax holidays anymore. Generally, for new manufacturing companies, now the tax rate is 15%, significantly a very, very tax efficient rate compared to any parts of the world globally, including Singapore, which has 17.5%, US has 21%, but India is a great competitive advantage. And possibly we could see some specific tax holidays being introduced in near future to assist various industries, and pharma could be one of them to get those tax holidays. Transfer pricing is another aspect which becomes very relevant. Any international transaction, be it an MNC operating in India or Indian companies operating all over the world, including US. So transfer pricing aspect takes care of some of those tax avoidance part. But these are some of the basic aspects we deal with the M&A. And let me stop here. We can take any questions which are there later. Let me move to the next topic, which is an indirect tax, a very, very important aspect in any manufacturing sector. And we have our leader on indirect tax, Amitabh Khemka. Amitabh, your perspective on indirect tax, GST with respect to the pharma and the healthcare sector, please.
Amitabh is on mute.
Amitabh, you are there?
I think Amitabh is on mute.
Okay. Okay, let me just move
to the next question.
Let me move to the deal. We can have Amitabh talk later on this. Move to the deal making, which is again a very, very important part of this sector. So Vaibhav, your take on how you see transactions, particularly in this COVID times and over next 3 to 6 months. What do you think? Funding aspect, various, how are investors looking at it, valuation, etc.
Oh, thank you, Uday. I think COVID or no COVID, pharma has always been one of the most, vibrant segments or sectors when it comes to M&A, when it comes to raising capital. Investors, venture capital, PE funds alike, I think pharma has always generated a good traction. Interestingly, the trend is not too dissimilar when we look at the current COVID times, Uday. Our own research, and when we look at various databases, has actually shown that while the number of deals may have come down by a few percentages, single-digit percentage, the value of the deals have still been there. Just this month itself, larger deals have been announced. So I think just from a first comment that I would like to make is, this is a great opportunity for the right set of value buys and for businesses that were looking to either add products, add geographies, add functional areas, add capacities to kind of look out for potential partners. And the reason is also because of COVID, there will be some cash flow pressures. There will be liquidity pressures. We have already in our own clientele group, we have seen several companies talking to us to try and see if they can have a larger partner for marketing and distribution, for accelerated growth. There are just so many inquiries that are coming every which way. So if there is a larger partner to handhold with an ability to put in cash for product registrations, for marketing authorizations, for getting the dossiers out in a timely way, I think there is a big uptick. So the first comment was really that this is a market where pharma is positive. If you look at the capital markets today, the PE ratios are in the upper 30s. They were between 25 and 30, 20 and 25. In the last almost about last 6, 7 months, 8 months, even before COVID. Really, the valuations have gone up and they have not really come down relative to other sectors. So that's a big thumbs up from the market. When it comes to the private equity investors, when it comes to the private investments, I think basis our conversations with a fair bit of the VC players, the private equity players, they are looking at 4 or 5 clear trends here. Can we consolidate? Can we look at pharma companies who want to kind of come together for various synergies? Now, synergies in terms of growth, synergies where can we add more products because there's demand? Can we use the capacities which are not fully utilized, some idle capacities, and can we kind of aggregate them? For that, there's enough funding that's available. We are willing to bankroll. We are willing to put the check. Show us the deal or show us a larger value creation that's possible. There's enough capital available. When it comes to a smaller business, an SME business, there will be tough times to really get investors interested just because of the scale. So when, let's say, if I'm an investor and if I'm getting opportunities to invest, I would look at a business model which is fairly matured, where I know that the EBITDA is already there, where I can see that putting more capital is going to really impact the valuation going north and substantially and fairly speedily. I would prefer that over an SME business which is yet to prove its ability to scale. So it's one thing to be a manufacturer, but it's so much more important to have the right marketing and distribution network and the ability to sell across geographies. So I think investors are largely looking out for those businesses where there is a moat. And when one can demonstrate a moat that, yes, I have a good distribution network, here is how I can take my products across various countries, I think funding is clearly available. I also wanted to make a point on, something that Milan might touched upon already was on the consolidation and aggregation. I think this is the time to collaborate. This is the time when Indian pharma companies have an unparalleled advantage. We have been, very big in APIs. We have been very big in generics. But it's time to really start innovating and focus a lot more on R&D. One of the questions was on R&D that we keep getting. Will investors fund R&D? I think if one demonstrates an ability and if there's a proven track record that you have been successful in, researching, getting the molecules in the market, doing your clinical studies, and then if you can ally with a larger partner, I think there is no better time than today. A lot of drugs are going off patent. There's a huge opportunity to pick up new and new products. There's a lot of emphasis on segmental products. So let's say whether it's wellness, whether it's women and feminine care products, specific segment, neurology, oncology, all of these segments have seen, when we look at the pharma IMS reports and the DRG reports, there's a fair bit of uptake. There are also special projects like antibiotics. In US, the controlled substance drugs have undergone a challenge there. But they're non-controlled substance antibiotics, because of COVID, again, there is huge expectation on supply. And when there is some anti-China sentiment, there is a huge, huge opportunity again for Indian players. So manufacturers in these segments, it is antibiotics, therapeutics, oncology, neurology, I think the order books are filling up. Now, if one doesn't have the capacity and one is seeking growth capital, I think there will be funding that will be possible.
Okay, thank you, Vaibhav. Let me get in Amitabh here. Amitabh, you're there?
Yeah, I'm sorry, my line got disconnected.
No problem. That's something to do with the technology. You're back, that is more important. So your take on the indirect tax and the GST impact on pharma, that will possibly complete the loop before we open up the Q&A. So Amitabh, over to you, please.
So the first question is on structuring the supply chain and then M&A. So if I look at from a supply chain perspective post-COVID,
Amitabh, can I request you to switch
I
on?
believe the costs with the risks, the industry will shift its focus from the total landed cost and possibly consider moving capacities especially the last mile, closer to the end markets, or the make or buy decisions would also be impacted, and companies could evaluate their contract development and manufacturing organizations, or the pharmaceutical distributor or the pharmacy models could also be fundamentally changed. All this would give rise to kind of collaborative arrangements, and the nature of supply, which is a taxable event under the GST law. And this will be a different kind of collaborative arrangements giving to new rise of nature of supplies. These arrangements will have multiple supplies within one such arrangement. And there will be complexity for evaluating the taxability, jurisdiction, timing, and also the value that should be taxed. Such arrangements are most likely to have quid pro quo considerations in non-monetary form also. From a M&A perspective, I would deal with one point, that M&As generally would involve transfer of a going concern or transfer of business as a going concern. Under GST law, anything that is not goods is a service. Hence, the transfer of going concern not being goods is considered as a service, and exemption is granted from the levy of GST. But because it becomes a supply of exempted service, in the period in which there is a transfer of business happening, it impacts your common input tax credit because you also have exempted services. I believe there is a fallacy in considering the transfer of going concern as a service in first place. The law ought to have regarded it to be outside the scope of the levy of GST, as it has done in respect of sale of land and building. And in matured markets like Europe, Australia, we see the transfer of going concern is outside the scope of levy of GST unless some specified conditions are not met. So what was required was that, as in case of land and building, the law says that it will be not treated as supply of goods and not supply of service, the same should have been done for transfer of going concern. It should be argued so, and it is an arguable case in my view.
Okay.
If we look at some of the initiatives which the government has taken under the pharma sector during the COVID times, the government exempted custom duty and health cess, and it has been exempted up to September 30th on ventilators, face masks, surgical masks, PPEs, COVID testing kits, and inputs required for manufacturing those. And the Director General of Foreign Trade has been issuing notifications, in fact, every week since February, imposing prohibitions or restrictions on export of PPEs, specified APIs, formulations, masks, textile material for masks, ventilators, and also hydroxychloroquine and formulations made therefrom. From GST perspective, if we look at, a lot of dust has got settled in respect of issues in pharma sector. The most important when we started GST in 2017 was what will happen to the tax holiday under the excise law for backward area and industrial area. Finally, government gave the tax holiday of central GST, though they reduced the component of the central taxes, which are generally shared by central government with the states to the extent of 42%. Input tax credit on time expired medicines, on physician samples, on expenditure incurred on R&D. These issues have more or less settled. Optimizing credit at R&D facilities, how do you use it at your corporate office, or GST on incentives and discounts given to the distributor. One aspect which is good is generally we have not been taking credit on inward supplies which are primarily meant for consumption of employees. But during the lockdown, the Disaster Management Act and the government orders require that the employees, especially the workers working in the factory, should be provided sanitizers, kits, masks, medical facilities, stay arrangement, food, transportation facilities, and health insurance. And because there is a mandate or an obligatory requirement under the law now to give these benefits, I believe now the credit, at least during the COVID times, can be taken in respect of those expenses which are incurred for employees. Last but not the least, since we spoke about force majeure, if somebody says it is not force majeure and there are liquidated damages arising from the contracts, then the question will arise at the receiver's end, what happens to the applicability of GST on such liquidated damages? The question is quite intrigued, and as Atul said, it is more legal. The courts have been holding it both sides. I believe it should not be taxable. Happy to take questions at the end.
Sure. Thank you, Amitabh. Uday, with your permission, I'll take over the Q&A session.
Please go ahead and conclude the session after Q&A.
Sure. So I think we have multiple questions that have started coming in, and I would, we have at least under 10, 12 minutes. Feel free to put more questions on the Q&A box. Milan, the first couple of questions are for you. Do you think the US FDA would relax their norms in providing approvals, audits of Indian pharma companies or plants based in India, given the current market situation?
My comment would be, look, those products which US wanted, they will relax the norms very fast for those products. We know that what happened with HCQ. They took it like this, okay? They took it, they got all the approval in every country. HCQ approval is HCQ, CQ approvals are in 2 weeks, okay? But what products they do not want, and they're not in rush, they would say, I will not approve the plant, but I will approve the drug. So my view would be the procedure may not get relaxed because the US FDA has a norm. My thinking is that they would continue the same norm, but when product specific relaxation may happen.
Sure. And Milan, what would be your take on China? So there are 3 questions actually on China, and I'll put them one by one. The first one was, there is a trend that there is a reduction in API plants in India in the last couple of decades, maybe due to pollution norms and low cost alternatives from China. Do you see global MNCs or investments coming in API plants to reduce dependence on China? That was the first question.
See, my comment here are 2. I read the questions and my comment are 2. The China can manufacture cheaper API, so everybody is going and buying from China. Imagine a situation when China has become a dominant player and increase the price. We all have studied economics. If it becomes a monopoly and they start increasing the price, till the time you are ready with your plant, they will exploit the market. So it would be important to go into the backward integration. Don't try to do everything, as I was saying earlier, but identify which APIs you want to got into dominant position. So you cut down the dependence from the outside and decide investing into. And I see that more investment will come into this segment. And as you said, Atul, Vaibhav rightly, if people will have the right intention and right business plan, money is available a lot in the market. People would invest into the company and country. India has known that India never exploits the situation. So that could be available. Going on the question about the pollution, I would give a different example. If we look at molecules are innovated, pharma molecules are mainly innovated in 3 zones, USA, Europe, mainly 2 zones, US, Europe, and the countries where you are, look at Switzerland where you have 2 big giant pharma giant, Novartis and Roche, okay? So when molecules are invented, the APIs are never manufactured outside the company which is manufacturing, correct? The company who is innovator. And those zones are still having high quality standard for the pollution. So the companies who are going to go into the API, they will have to invest into also high quality norms for safety standard and environmental standard. And my belief is that that is a great opportunity of backward integration, and all cannot do it. It will have to come as a group of few companies coming together, identify few. And if we start deciding that we want to manufacture, you cannot change tomorrow. You start importing, you start producing. So slowly, you start overtaking and getting into certain product and cut down your dependence. So that's my comment. Did I cover all the questions you gave?
Yes. There was an industry question, and whether the government really, in your view, should be bringing in more stringent regulations for the pharma industry, for the importers, basically FDI in some sense, because China may be looking to acquire more Indian companies. Maybe even Uday can have a comment. Just
See, my-
FDI restrictions.
See, my thinking is that I would give my comment from business angle, and then Uday bhai can give the comments from FDI. If somebody approach me and say, I want to buy your company, it is me as a shareholder. I need to be clear whether I want to sell my company or not first place. So China may have a lot of money and they will come to buy your companies, but it should be Indian investors should hold themselves, because today is a bad timing for them to sell, because you are in the cost pressure. You may want to look at alternate way of funding your companies instead of just selling your asset and getting out. Second, I would say that don't try to be easy target, but because if any of you know in a different industry, Italy, North Italy, why they had so many cases of COVID? Because North Italy is known for leather good and textile, but North Italy is totally controlled by China, because most of the 80% of the companies are owned by China, and there are more than 300,000 Chinese are working in North Italy. So when you get a product of leather good made in Italy, it's not really made by Italy or Italians. It's made by Chinese in Italy. So if we don't properly prepare, then you may see in India, a lot of companies with Indian name, but are owned by some Chinese. So my view would be, people have to protect themselves before the government help you. And government question on FDI, I would pass it on to Uday bhai to give his expert comment.
Sure. Thank you, Milan bhai.
Do you want me to address it briefly?
Yes.
Vaibhav?
Yeah.
So FDI, there is no restriction from including China. It just requires a specific approval. You don't want that, takeover of companies by, China at a low valuation, and that's the objective. It all started because People Bank of China, increased its stake in HDFC Bank, and that really triggered to say that we should just go through and see if there is a genuine investment coming. Even China is not barred. With respect to other countries, very clearly, I think FDI policy is what it is. Now, this entire local, aspect has maybe created a question: are we really going Swadeshi and there will be all restrictions? My view is not, but we want to really promote our India brands. So there could be MNCs who will come and sell and promote India brands in India. They are more welcome. Even for exports, they are more welcome. And that does not mean that we will be not, getting into any foreign brands. I think it's more aimed, in my view, at China than anything else. That rather than importing all the products from China, you go more and promote India brands and including that. And that is a general this thing, no specific, no sector. I don't think any, and as I mentioned in the beginning, the policy is self-reliant, not self-isolation.
Sure.
All over the world, everybody is protecting themselves. So India is no exception in that sense. So I don't think any FDI should be impacted, but yeah, I think we are protecting ourselves here clearly like anybody else, and that's the way it is. Yeah.
Sure. No, thank you. We'll take last couple of questions. Amitabh, there's a question on incentives. Government had come up with a scheme in February, March, 9,000 crores allocated to bulk drug parks, etc. It's a futuristic scheme that the government has announced. But what is your thought, or in terms of expectation? Do you see the government coming on with new schemes to promote pharma manufacturing, especially in COVID and pandemic times, to generate more employment and basically have more exports? Do you see some special incentive schemes coming up after the investments that were announced in the next couple of years? Do you see any trend there? Amitabh, you are muted.
So Vaibhav, at least I don't see any such schemes coming in immediately. If we are seeing the 20 lakh crore announcements which are going on, the focus is not on these sectors at this moment. And from an export perspective, currently the industry gets the duty drawback and those kind of schemes. And there is all the duties. In fact, the duties which are not currently for credit, even those duties are given back. So at least I don't foresee from an indirect tax perspective under the foreign trade policy or from indirect tax perspective any schemes coming up.
Sure. Thanks, Amitabh. Milan bhai, the last question. For a SME pharma entrepreneur, or even let's say people who are beginning last 3-5 years, they've just started up and now they want to consolidate. Is there a bigger opportunity that you see, A, in terms of their own growth, and B, in terms of strategic alliance with a larger partner? and still retain their equity so that they can get the upside of the valuation as the wealth creation happens?
Now, very good question. If I say to you, without naming the company in India who are doing very smart jobs, so there are the SME companies in India who are not very big, 60, 80 crore company, 90 crore company. They develop very nice product. And they start marketing their product in certain geographies in India, and they realize that they don't have nationwide reach, or they don't have a reach in the outside India reach. So they do two things. They will reach to the companies who are specialized in those therapeutic area, could be big Indian MNC or MNC, okay? And then they partner those product with marketing rights where they still continuously manufacture. So they are on a fixed markup. They are not spending any money on the marketing expenses. And going forward, all the questions on those products are taken in the other countries or in other geographies by the companies who are taking and who have larger reach. I would say there are some companies are doing smartly and some companies are making mistake to try to do themselves. So my comment to the SMEs, MSMEs would be that identify your core strength area. You identify if your strength is in development and manufacturing at right cost, give an excellent quality product, and then you start tying up with the right company. So when you've got a tie up, you have a wonderful contract with one of the big names, your valuation is automatic because there is a secured product, you have secured margin, and also you, if you are smartly negotiated, you are earning a little bit out of the every pack sold, maybe as a participative profit, the way you design the scheme. Then if your product is really good, that same MNC will take in multiple countries, okay? So these are some companies are doing very well. If some companies are saying that, no, I'm the one who is just developing, I'm not going to manufacture. Perfectly fine, your product is in second stage, phase 2, and you are confident about it, start reaching the companies and say, I have this. And if they like it, they will put even money on the development. And they will say, okay, I will put the money on the development with you, but then this is my right once your product is ready. Then you, and this is what is happening, Vaibhav, in the company, some biotech company in USA, who if you say, and there are the known examples, that companies will develop the molecule, will give it to the big names like Roche, Novartis, Sanofi, and they will take it over to the worldwide. And this company, we just signed a deal with one company in the USA for taking the product in 7 countries. Excellent product. Excellent product. It is a nanotechnology used for, I cannot go more, okay? Excellent product in pharma, okay? This way one has to optimize, and we are trying to optimize. We are not going to be in development. We have seen that we have a strong marketing powerhouse, brand builder, certain geography, and development. We are developing certain product, but getting it developed in some laboratory based on our need. So that's my comment.
Thank you, Milan bhai. That's very insightful. I think we have run out of time, but anybody having any more questions, do keep emailing out on markets@knavcpa.com. If I were to sum up, consolidation is a clear theme. When we were looking at what should we be focusing on, we said back to the future, there's a whole aggregation play, a consolidation play from various angles that will help pharma companies to kind of grow. Clearly, synergies have to be looked at from using a bottom-up approach. From a tax perspective, structure is the key. There are success factors for an M&A that need to be put into place before one goes forward for the deal. And finally, one has to integrate well. It's one thing to come together, but it's very, very critical to integrate. I think these are similar kind of lessons that we keep learning. I think to our mind, there is no better time than now. It's a level playing field. I think businesses can, in some sense, take advantage of this if one is agile and one takes some of these principles. So with that, friends, we have come to the end of our session today. I would like to thank all the panelists, starting with you, Milan bhai. Thank you for taking out time. I know it's very late in Singapore. We really appreciate it. Thank you, Uday bhai, for your opening comments and the moderation. And I'd like to thank Atul Deshmukh from Atlanta, Amitabh, Khemka, my colleague in Mumbai, and Somil for helping us put all of this together. Of course, I would like to thank all the participants for staying up a little late in the evening. Thank you for your insightful questions. We look forward to interacting with you more and more and some more topical sessions as we make progress from here. All right. Thank you, everybody.
Thank you very much.
Thank you very much. Thank you.
Bye.
Thank you. Thank you, Vaibhav, Atul, Amitabh.
Bye-bye. Thank you.
Bye. Thank you.
Milan bhai.
Thank you.
Thank you, Uday.
Thanks.
Thank you. Bye.
Thank you, Milan bhai.